What's up, YouTube? Welcome to another episode of Get Technical. How are we doing? Let us know in the chat. Why do you think I'm mad? What are you talking about? Is Power Hour still going? Bloviation Nation?
No. We wrapped it up.
Always good to do.
Yep, always wrap it up.
Hey, Backyard Koi and Art. The self promo is picking up. Love it. How'd you switch?
I got secret producer.
Oh, you just drag it. Okay.
Oh my god, you found out. That's my secret producer.
I know how to
magic.
use a computer. TNX dropping, looking at QQQ again. Yeah, we are looking at QQQ right here on the screen.
Dude, I traded some SQQ calls. I bought them yesterday, like as market closed. Trade them today for a nice 30% profit. 30% ain't nothing to sneeze at.
I'm not sneezing. Nice, man. All right. So, guys, welcome to the Wednesday edition of Get Technical. Did you guys all have a good Labor Day weekend? Give me a 1 in the chat if you had a good Labor Day. If you kicked up your stinky old feet, sat back, had a nice ice cold Yoo-hoo. This episode not brought to you by Yoo-hoo.
And after Labor Day, happy Rosh Hashanah, if any of our viewers are members of the tribe.
There you go. Looks like everyone had a pretty good Labor Day. That's great. Jeff Rude, last Monday.
Dude,
SDBC did not enjoy it.
I had a call with like an international company that I scheduled on Labor Day, and I like emailed them like 10 minutes before the call was supposed to be, and I was like, yo, completely forgot it's Labor Day.
I did that with a lot of my meetings. Feels bad.
Yeah, it's not smart on my part.
Happy Rosh Hashanah.
Oh,
Sunaid. Don't. This is a safe space. Get Technical is a safe space. All right, and don't break that. Don't break the circle. You guys, your secrets are safe with us.
And we can just say whatever
ours are safe with you.
We can just say whatever we want because we know Jason's not tuning in to Get Technical. So
yeah.
Zunaid got me so hard one night. I tweeted something when OnlyFans like took explicit content off the platform.
Yeah.
When like that was in the news, I like tweeted something from Benzinga's Twitter, and he called me and was like, dude, like Jason called me and is like pissed. Like, was that you that tweeted this OnlyFans thing? And like in the back of my head, I was like, oh shit. But I was like, all right, play it cool. I was like, yeah, that was Spencer and I. Like I just completely threw Spencer under the bus because Spencer did give me the green light. So I was like, if anyone's gonna take heat for this, it's got to be Spencer. He's more my senior. And then Zunaid was like, "Oh man, I'm just effing with you."
I don't think there's a better Shinigami. All right. I don't think there's a better fall guy than Spencer Israel. Let's just see what comes up. Have you done this?
I've never Googled Spencer Israel.
He's coming up. He's the #1 Spencer Israel in the world.
That's pretty cool.
Twitter, but his author profile on the Benzinga website, LinkedIn, Muckrack.
Benzinga journalist. That makes him sound like very important.
He is important.
Whoa, it looks like he has like
We
makeup
love him.
in that. It looks like he has like makeup in that picture or something.
Well, yeah, you do makeup before you get a headshot, right?
I don't know. I don't know. My LinkedIn photo is like not even a like professional photo.
All right, guys, let's look at some stocks. So one thing I just wanted to point out, number one, I'm red today. I don't know about you guys. I had a couple good trades inside of the day that are not like my normal like holdings and stuff. But on my normal holdings, I'm just red. But that's fine. Palantir is the biggest one that hit me there. I didn't have a stop loss in place. At least I didn't update it. So I took a little hit there. But I'm looking at SPY. So when I'm taking a dip on all my individual holdings, it makes me want to look at the index and see. Oh, Ruhal's here. Hey, Ruhal. Yeah. We can send that to you framed if you want to put that up. Yeah, thinking about going down on HIMS. All right, let's look at HIMS in a second. But I just wanted to point out with SPY, just using the Bollinger Band, I'm just here to... Oh, I'm sorry, Producer AB. Are you rustling up like some gum wrapper or something right next to the microphone? Because the audio sounds bad, and I know I'm not.
Yeah, that's weird. I don't know what that possibly...
So we're looking at SPY. And I just want to point out the power of the Bollinger Band, guys. So we've got our 20-day moving average, and then we've got upper and lower standard deviations, 2 away from it. And just looking every time that it bounces, you get that confirmed bounce either off of the lower deviation, which is the screen line, or off the median itself, which you see happening twice here. It creates really good buying opportunities. And this is a good one. And guys, if you guys give me a 1 in chat if you're fans of dollar cost averaging. Give me a 2 if you don't like it. And Luis, we talk about that right now. I'm showing you. I'm in the process of showing you right now, my friend. I love Bollinger Bands. So a 1 if you're into dollar cost averaging. If you're a dollar cost averaging household. We're seeing lots of 1s. 1, 1, 1, 1. Manny, okay. Okay, utilities had a good day. We'll take a look at utilities. I just want to make sure that Luis gets the Bollinger Band rundown, because I'm a representative at the Church of Bollinger Bandology. We're just going to run a couple tests here on Luis and just see if you qualify to join the future of the human race here at the Church of Bollinger Bandology. So the way the Bollinger Band works, my friend, is all based on the 20-day moving average, and investors historically, and for trades, not for only for my Roth. Yeah. It is all based on the educated assumption of 2 things. Number 1, that stocks tend to gravitate toward their 20-day moving average when they're in a trend. If they're going up, if they're going down, they tend to return to that 20-day moving average, up and around it. And that's at this red line. And then statistically, when they go above it or below it, when you're looking at the distribution of data points, which is just your closing prices for whatever time frame you're looking at, you've got your average here, your average. They tend to go out as far as 2 standard deviations away. That's as far as they tend to go out before they return to the mean, which is this middle guy right here, which is our 20-day. So it's a really good way for folks to get an idea of where we are in a trend. So in the case of SPY, which is the ETF presumably representing the S&P 500 index, we see that just about each time in recent history, and we can go back further, but I'm going back to October of last year. Each time we've gotten to the lower band, we've gotten our bounce and a return up to the upper band. All right, so it's this oscillation between these two standard deviations. And then also, we often get a return from the upward standard deviation down to the 20-day moving average, and sometimes that's the bounce. So you're just knowing these levels, this mean or this average, excuse me, and its upper and lower bands, and then just watching for how price behaves around it. So now that we've had a 2-day decline, well, technically like 3-day decline here in SPY. Now we're looking like, okay, we're getting that gravitational pull back to at least the mean, which is that 20-day moving average, simple moving average on the daily. Will we get a bounce from this, or will we cross through it? If we get the bounce, then we can expect a return up to the standard deviation, or at least that's the idea. If we get the cross, then we expect to cross all the way down to the lower deviation. Remember, this is a lagging indicator. It's just giving you boundaries and some sort of average to capture sort of the magnitude of your volatility and help you time entries and exits. So my thing is, like, I dollar cost average into SPY. It's one of a few ETFs I dollar cost average into. Well, actually, I use VU, which is similar but different. It just has better dividends. This is the Vanguard S&P, but we're just using SPY because everyone knows it. So I look for times like this to, on top of my dollar cost averaging, I'll do lump sum entries, or like larger entries into it, so I can just capture more of that cha-cha, if you will. Okay. Yeah, I went to California to San Diego to hang out with my friends for Labor Day. And had 1 day extra. Well, I flew back on Tuesday and it took up my whole day to get back. And gotta be honest, I haven't showered. But who do I have to impress? Definitely not you guys. All right, so guys, what do we? Okay, so when it goes under the 20-day MA, then I should buy because it'll come back up. The idea, Louis, is that when it's bouncing, when it shows a reversal or a pivot to the other direction at any one of these lines, you may treat it as a go long or go short signal. It doesn't mean you simply do that. It means you may treat it as one signal that it makes sense. And I'm just showing historically that if one were to have entered at each one of the bounces on the lower standard deviation and bounces on the 20-day moving average, which is this red line, they would have seen some nice returns. Also works if you're just long, whatever. It's also a nice signal for just buying some calls. Or whatever, however, using options, which is prosperous. Probably that's what you're asking about, the 440s. Oh no, you're talking about price target. Okay, I thought you were talking about a strike price. I would say that it's a possibility, but like when you're using the Bollinger Band, this is how it works. And it works this way for any moving average. Is that there are really two things that can happen. It can either hit and go the other direction, or it can cross through. So you're watching for that. Do I mess with the numbers on the Bollinger Bands, Jeff asks? Nope, this is just the standard Bollinger Band. I don't mess with it at all. and it's just because it's worked for me. Like I'm fine looking at my portfolio every day and having it green just on regular old VOO games. I'm fine with that, and having that be the majority because I look at my entire account as like 80% investment, 20% trading, which is majority swing trading, and then within that, you know, sometimes I get a little funky with some shorter term stuff. Oh, price action. All price action means is, so like this is the price on the chart, right? Like each one of these candlesticks is showing us the price movement or the price ranges for the given time period. In this case, each one of these is a day. Price action is just the dynamics, it moving. It's price dynamics, price movement, price changes, price action. It's all synonymous. Oh, nice. STBC. That's a big shout out. You should at so let me double click on my chart to pull up the RSI. So that's one that I did change. So my RSI is changed to 10 days instead of 14. And that's not me. That is Jake Wojcicki from TrendSpider. He was on the show and he brought that up, and it makes total sense. Yeah, and Jeff, yeah, but the Bollinger Band has been great. Is still and has been great with Bitcoin. And then okay, so let's delete the Bollinger Band and let's look at it using the Ripster clouds. So these are just a handful of EMAs, which you can see here. The number, it's the 8, 9, 5, 13, 34, 50, 72, 89, 180, 200 moving averages. And then with the space between them filled in. And then with a color change when we get crosses, meaning one moving average crossing the other. And then you can see that with these, if I just get rid of, here, let me delete all my little arrows. Whoops, that's not what I want. Get rid of all my arrows. That every time we're going down into the blue or into the green bands, that they've created nice buy-in opportunities. So this is also just another very clear way to look at trends. And when Ripster was on the show, that's the kind of the way that he staged it. He's like, I don't use this as like what I use for like entry and exit is the actual horizontal like levels. Hatred. Your name is Hatred. That's funny. Someone give me an answer on how this isn't financial advice. Because the legal, this comes down to semantics. The legal or SEC recognized definition of, or FINRA actually recognized as well, recognized definition of financial advice is telling you to buy, what to do with your money to buy and sell a stock or any type of asset. And I'm not doing that. I'm showing you how to use a Bollinger Band. So wow, I didn't know you guys were like, you guys were really having a conversation about that. We need to get our lawyers in chat. Producer AB, do you have our lawyer there with you?
Yeah, I just got a quick producer note. All content is for informational purposes and not to be used as investment advice. Opinions do not represent those of Benzinga. Hosts and guests may maintain positions in the securities discussed.
That was, oh yeah, our lawyer, he's got that thing that where he speaks through you. He possesses you like a demon, and he speaks through you. That's why your voice changed when you read that.
Exactly.
Only on Get Technical, guys. Make sure you like and subscribe.
It was weird. That was weird. But yeah, I mean, like he just takes over. He's like what's the Rick and Morty, like Unity? Like it's like an entity.
Yeah, with telepathic capabilities. We got a great legal team at Benzinga.
Shout out Andrew Weiss.
Oh wait, hold on, Aaron. All right, guys. Oh, hey, Joe Rogan's here. Nice. Hope your worms are gone. All right, so you want to look at Amazon?
I like how someone was like posting the chart of, I think it was QQQ or like Amazon or something, and they were like, all these assets are so overpriced. Like, look at how much faster they've grown over the last year than like all years prior. And like the top reply was like, the companies have been making a lot more money in the past year than in years prior.
Yeah, no, I don't. I probably haven't seen the same post, but that general conversation, which is like, okay, let's look at SPY, and it's like the reason this is up is because of like Microsoft and Apple, and like everything else is underperforming. Like if you take the FANG stocks out, everything else is underperforming, and it's like, how is this a representation of the overall market? Because like almost all of the goods and services that we're buying, period, are coming from like Amazon, Microsoft, and Apple, and like Netflix, like everything. You know, so
yeah,
that's not a perfect answer, you know, and like perhaps some rebalancing should be done for SPY, but I mean, yeah, they are growing that quickly. Like I buy every single thing that's in this shirt is from Amazon. This is an Amazon basic shirt.
No way.
Yeah, you guys. All right, story time with Neal. Turns out that in my laundry room at my apartment, I think I've brought this up before. If you don't get your laundry out of either the washer or the dryer fast enough, and I'm fast, guys. I'm not leaving stuff down there. All right, I'm not. Like I only have so many clothes. If you don't get it fast enough, they just throw it in the garbage. Like in the dumpster outside. So I can't like dig in the garbage and get my clothes. Like they take it out of the washer and dryer and then they put it into the dumpster. So it's gone forever.
So has this happened to you before?
Twice. And so on both occasions, I just went on Amazon and just got all Amazon basics, like just like tees, button downs, pants, socks, everything.
Interesting. I might have to try that out.
Yeah, it's the future we all live in. So I'm gonna just block this user because they're being disruptive. Bye. So
Zunaid,
yeah,
let us know.
That's an easy ban, guys. Easy
Zunaid,
ban.
let us know in the chat how the Amazon essential shorts you're wearing are.
And tell me if the elastic band says good feelings on it, because that's what all my underwear says good feelings, which I think is probably a bad translation. I don't know if he's that bad. It's just like disruptive. The whole thing is you're going to disrupt the chat from the what we're talking about on the show. Then you're out.
To be fair, he did like cause us to read the disclaimer that we probably should do more often than we don't. But hey, he's got us covering our bases.
Yeah. That's true. Maybe, but we can do at the end of the month. We can do a review on folks that we should let back in.
Yeah,
if they really want to be in, they're welcome back. You know,
I think just based on the name, he's like lowering his chances of us letting us back in. Like this seems like a very like positive, good guy. Oh, but his name is Hatred. Yeah.
Yeah. Okay, so we're looking at Amazon. So Amazon, just to be completely clear, I forgot who brought it up. Sorry, I lost her name because
it was Joe Rogan.
Oh, yeah. How could I forget? All right. So yeah, how are the worms? Where's Joe Rogan?
Rogan,
Mr. Spotify. Oh, he's up. All right, I didn't even see him there. So just we've been having the same conversation about Amazon for a long time because it's been trading in the sideways range, which sucks. It's not in a clear upward trend. It's in a sideways trend or a sideways channel. And then just by simply just drawing a line through the middle of it, you can get an idea of the mean, which is the same exact concept as the Bollinger Band. So let me draw a Bollinger Band on here. Yeah, that sucks. But it's the same concept, which is stocks tend to oscillate up and down. They sort of orbit around their average, which can serve as resistance and support and so forth. Am I on log or on regular? I'm on regular. But we look like we're attempting that breakout again. So we keep trying to get out of this general area, Joe. at about 3,555. I think it is 3,555. But it's it's a range of prices. It's a general supply zone where folks tend to sell every time it gets up there, and we're just approaching it again. So what's kind of helpful and perhaps also not as nice is that now that we're climbing back up, which we've gotten this nice upward pattern with a where's my paintbrush tool? We've gotten this nice upward pattern with a little corrective phase with an upward pattern. So it's looking like it's not acting goofy like a super pumped stock. It just looks like a stock that we can use basic technical analysis on. We're getting up into this resistance zone once again. And the thing that I want to point out is that now that we're in this resistance zone again, if we do break out of it, we have these two levels of resistance that we're going to have to also get past. Because when we got this big green candle, people were cool with it for a little bit, and the bulls were really pushing it, and then profit was taken. And then we got back down to support, which really excited people. They held that support. People got excited. Buy. Did not get as high again, and then just sold us way down with this massive gap, which we've since closed and are back into this resistance area. So once again, we're just back kind of where we were in June of this year. Which is wondering if the bulls are going to come in and push us through this overhead supply zone. So it's not knowing what will happen. It's watching to see what may happen with a sort of educated perspective.
I see Strangler in the chat saying, AB, are you going to try that? Throw out all your clothes in the dumpster and replace them with Amazon Basics? No, Bill. I actually have like a weird, I think like caveman-like tendency where I get attached to some of my belongings. And I get really upset like anytime I lose a t-shirt or article of clothing because I felt really attached to it. But after doing some digging, I think it's like a Neanderthal tendency of mine. So I'm trying to learn how to evolve from that.
Good. And that's all we can hope from people is just to evolve.
Yeah. Lisa Lee Hunt, no, you are awesome. Thank you for being awesome and
That's
tuning
right.
into the show and smashing the like.
So let's look at hymns because someone mentioned that. Wait, oh, this is HMS. Whoa, wow. Whoa. What the hell
I was gonna say hymns is at 4. What? Wait, we might have accidentally found something there though. That trend looks very strong.
Oh my god. What the? What is this? HMS Networks, technology information. Just gonna add that to the watch list. Just wait to have it. Oh wait, hold on. This is not a U.S. equity. Okay, so taking that off the watch list. So HIMS. HIMS.
Yeah, but if you're in Sweden, HMS looks great.
I'm just gonna delete all of my drawings and stuff. Oh, that's the 1 week. I think the 1 week is a pretty good illustration of what's happening with hymns, which is we wanted to see because we discovered a new low for hymns, which is $7.12. And then when you get like this big red candle, and you want to be really sure about a reversal, it's really nice to see this green candle actually just be bigger. So within that week-long period, it would have been very, very heartening to see over the course of that week for us to get above the 835 handle, which is where we're stuck right now. So hymns is still, it's taken 3 weeks to show us if that we can engulf this week's price drop, the week of August 16th. And so far, based on the looks of this candle, you can see the bulls tried to push us up here with this wick, but we're getting pushed down, and people are saying, no, we're going to keep selling, and we think that we're going to keep this below $8.38. So I would say, I'm in hymns, full disclosure, that entering HIMS is something that becomes attractive once we break above multi-week resistance. So this is like 1, 2, 3, 4, 5, like arguably like lining right up with that zone. 6, if we use this red candle, we'll do what Ripster taught us to do, which is use a rectangle tool to box in this sort of supply zone rather than just like a really thin line, and just kind of say it's like right around in here. So really just getting out above that is a really bullish signal right now. Entering looks like it could be just rejected and bounce back down. Let me look at this. Yeah, and so here's another thing is we got this like above average volume on the week of August 30th, so like right toward the end of August, and the candle wasn't really that compelling. So when you're getting a ton of buyers coming in, this yellow line is the moving average. When you're getting a ton of buyers coming in and you don't see it reflected in the candles, that's a sign that there are sellers meeting them there. So it's a bit of a divergence between what these two indicators are telling us, which is a bearish signal. Yeah, so there you go. That's my take on HIMS. Yeah, Jeff. Yeah, happy hunting, my friend. Dude. Okay, so Shelly's calling us out for naming.
I know it was the classic bait and switch. You got bait and switch, Shelly. I don't know what else to tell you.
I don't.
We can go over to ETH real quick. Take 30 seconds to break down ETH. Are we on the weekly right now?
Yeah. Yeah, so I mean it's not too crazy of a meltdown, honestly. It just got rejected at the zone. You could look at this. Like I know it's like all the headlines are like Brr. I mean, of course, if you're holding a bunch of it, it doesn't feel good right now. But a lot of times with these bases, what you get is at the neckline, which is right here. Once you break above it, a lot of times you get a pullback. So we're looking at this as what is that site? We haven't done it for a little bit.
Market Structure Edge.
No, not Market Structure Edge. Yeah, Market Structure Edge rocks. Oh wait, is Tim here?
Yeah.
Okay. So there's Ethereum. We can talk more about Ethereum if we have time.
What does this site do? What are you talking about?
I'm just looking for the Dow chart for the Dow cycles. But basically,
the Wyckoff.
Following, as Wyckoff, yeah. Following a period of accumulation, you often have a pullback before your longer term markup phase. And then when you before you top out. And so this pullback for any type of broad base like we have right here is something that I think happens more than half of the time. But you'll just want to see some signs of strength coming out. And just hopefully everyone that's trading really volatile assets has stop losses in place. All right, so let's bring Tim Quast on from Market Structure Edge. Hey, Tim.
How are you, Neil? Good to see you. Aaron, nice to see you as well.
Hi, Tim.
Have you got this? Have you got this cryptocurrency thing all figured out for us, so that the rest of us don't have to do any thinking? That's what we're counting on. That's what we're counting on.
Yep, but
Good.
yeah, but we're keeping it a secret.
Right. That as they would say in the South, that they're going to cost you a pretty good chunk of change.
Yeah,
right. That's
exactly
what it.
Right.
Yeah, that's it.
That was pretty good, Tim.
Thank you. Well, it's authentic. You know, I spent several years in college. Part of my college years in East Texas, and so the story behind that is when you didn't want this, but I'll share it nonetheless. So when I was a senior in college, I worked for the campus housing department And the guy who ran it was hilarious. He was we'd have this Monday staff meeting, and he came in and said, "So I had to take my car to a mechanic, and I wasn't sure what was wrong with it, and I took it in, and there was this guy working his suspenders, and again, this is the Piney Woods of East Texas, and he looked it over, and he came back, and he said, 'That they're going to cost you a pretty good chunk of change.'" That's where it came from. So I'm just passing it on. That's it's actually real.
Yeah, well, we appreciate that karmatic passing of
absolutely right.
Excellent. Right. So Tim, for the folks that are not familiar with you and Market Structure Edge, would you mind providing an introduction?
Sure. So we bring the ability to see supply and demand in stocks to retail traders. That's really what we do. Market structure is a jargon term, although if you hang out around Dennis Dick at all, he'll hear the term routinely. Market structure is, is the rules that govern how the market works. I say it's the behavior of money behind price and volume, and it is the most underappreciated factor behind how stocks behave of anything. If you listen to CNBC all day, and I don't recommend it, the time would be better spent hanging out at Benzinga. You'll learn a lot more about trading. You will hear people talk all the time about how, well, the reason the market's struggling today is the mounting pandemic fears, the Delta variant or the Mu variant or this thing or that thing, or, the Fed taper concerns are mounting. Well, the truth of the matter is that's not really how the stock market works. There are constituencies in the marketplace, just as there are in a grocery store. People with different demographics come into the store and consume different things at different times. Well, the stock market is no different from that. And those behaviors, thanks to the rules, regulation, national market system, those behaviors can be measured. And you can see when behaviors wax and wane. And it helps you to understand why stocks go up and down. That's what we do, Neal.
Beautiful.
And it's marketstructureedge.com. That's the place.
Marketstructureedge.com. AB, as soon as he gets off Hinge on his phone, I was going to drop that in the chat. Thank you, AB. I see you. So I think the market or the grocery store is a really good analogy. Different folks are going to be buying different things, but overall that's going to affect what the balance sheet of the grocery store looks like at the end of the day, and who's coming home with what. So there you go. I would love, Tim, if we could hop in to a screen share of Market Structure Edge so we can visualize what we're talking about.
Absolutely. And maybe we can take a couple of cases in point. Traders, this is why this matters to you. There are 36 companies reporting results today, 40 tomorrow. So let's say your strategy is to try to leverage an event like that. Is there an opportunity to profit on the upside or downside move of equities around earnings? It's a very popular hedge fund strategy, by the way. So it can be a huge advantage to know what the supply-demand balance is beforehand. For instance, we could look at Coupa Software, UiPath, two companies that had really excellent results, and yet both of them went down. And it's one of the confounding things in the profession I've spent 26 years in, which is the investor relations profession. That's the liaison to Wall Street at public companies. Somebody's responsible for interacting with the research analysts at Goldman Sachs and Morgan Stanley and so on, and then interacting with the big investors. And our sister company, Modern IR, is the largest provider of quantitative market data to big public companies, so they can understand, well, what's the money doing? And it can be very helpful to you. So let me get my face for radio out of the way here. And so I'll give you a couple of examples. So by the way, this is the dashboard, and it's like the bridge of a ship. And you're the captain of the ship, and you want to know what all of the dials are telling you to know if there's anything to be concerned about. Are you proceeding apace? Is your course set correctly? It will be apparent looking at your dashboard. And I'm going to go into this portfolio here, but all of these little tiles that you see are different portfolios of mine. I like to look at, this, by the way, best and worst. It was just a great look at one of the best performing stocks of the past year, Fortinet, against one of the worst, Vertex. And why would one do well and one do poorly? Well, guess what? It's the answer is in the data. You can see in the behavior of money what causes that. And this green thing that you see here, that's demand. And demand waxes and wanes between 1 and 10. We have a scale. It's an algorithm that does this, but it gives us a way to very easily comprehend the demand for stock and when it peaks and when it begins to decline. And the bottom one is supply and demand. Most basic principles of economics. The prices of things lie at the nexus of supply and demand, right? So it's a great way to think about it. And by the way, then you don't have to worry about charts and reading a bunch of headlines. Not that you don't want to. All of these things can help each other. But if supply is falling and demand is increasing, there's a much higher probability that a price rises than it is if it's the other way around. And if demand is fully maxed out before there is an event, well, what if some behavior stops buying to look at the news? Well, the price is going to go down. So I'm going to go over here back to this portfolio. As I said, I would click through and we'll look at this. I want to show you, and then I'll shut up here, Neal. But let's look at Coupa, and I'll add path to this. I don't have path in here, I realize. So here's Coupa, and so the demand side. Remember, it's a 10-point scale. 1, least, way oversold. 10, most, overbought. And Coupa's overbought, hitting the ceiling. 54% of the trading volume before Coupa reported results was borrowed, is short, is manufactured. There's a lot of it's the supply chain of the stock market. I won't explain all that now. If you're interested, do a trial. Sign up for marketstructureedge.com. You can do it for free. I explain it. We write market desk notes every day, and we talk about how exemptions from regulation SHO, which governs shorting, Rule 203b2, enables firms to create stock. Well, it's the way the market works. So look at that. Fast traders are the lead behavior. It trades $15,000 at a time, and here was the price before it reported. Okay, so this is what we want to know. What's the supply-demand equation here? And I'm going to just scroll down a little bit so we can see both supply and demand. And I'm going to expand this out to I like 90 trading days. So this will tell me where there are fluctuations in demand. Notice this, generally speaking, when demand rises and supply reverts to the mean, what do you get? A very nice move in price. It's not every time, but it's a very consistent mathematical principle. And so long as Coupa is below 5, avoid it. If it's got demand less than 5, then supply exceeds demand, even when shorts covered in here. It helped the price a little bit. You see that? We got a little recovery because short volume declined. Here's where it returned to 5. And then look at this run into earnings. But now supply is above trend and demand is at the ceiling. What's the likelihood of additional gains? Well, mathematically, it's very small because, once again, if the one constituency that is paying attention to what Coupa says, what their earnings are, what their guidance is, and they stop what they're doing, the stock's going to go down because supply will exceed demand. So you should be very careful about that. I tweeted it yesterday. I said, this is a risky setup. Be careful. It's not the thing you buy. You want to buy rising demand into earnings. It's a really simple way. You could put a whole set of companies that you want to follow that are reporting results and just isolate for the ones that show rising demand and steady or falling supply. The likelihood that you produce a return is much better. It's not perfect because we don't know what they're going to say, but we know that the supply-demand equation then is on our side. And let me just add one to this, and then, as I said, Neal, I will shut up. But let's add path to this and see if the same principle applied. So there's UiPath, Romanian started company. One of the great automated update and maintenance software companies in the market. Really, really interesting story. Had great results, raised guidance. So what was the issue here? Well, look at that. The supply side is 64% and rising. And the sentiment has already topped and is declining. We've already missed it. We've missed the turn. So if you were going to buy this, you would want to, Teams comments. Here again is this demand side. The green bar is demand. This other bar, that's price. Okay, closing price. So then if we look at If we look at where's the opportunity? Well, it's not been great. Look at the amount of time that it's spending, below 5. It's spending an awful lot of time below 5. And we could profile this. We could test it and say, well, is there a higher probability or lower probability of returns? And I can tell you already that the math will say, if a stock is not spending significant time above 5, then supply exceeds demand, and the propensity will be for the price to decline. It's not an absolute, but it's certainly been true, right? This was the last time it was a 10. And if you were to buy it here and then short volume pops up above the trend, leave there. And really, it hasn't given us a good entry point. Again, you could say, well, what about here? Sentiment rose. It did, but short volume's well over 50%. If more than half of the supply is coming from borrowed stock, be very careful. It's nice to have rising demand and short volume well below 50%. And so if you look at what happened right before they reported results, they had peaked here, short volume's well over 50%, ticking above trend, and demand is already declining. The likelihood that this stock declines is very, very high. You could short that, right? So there's a short trade you could do, but yes, certainly don't want to be long with those conditions. Okay, Neal, I've rambled on a lot there.
Good ramble. Good ramble. Let's get ones in the chat for the ramble. Okay, so I think this is a really good introduction to what I think is a very simple way of getting information from a lot of different data. Guys, any tickers that you're interested in seeing on here? And there is that bit of a delay, so we got ones in the chat for the ramble, so we appreciate that.
And while you're doing that, let's look at Coinbase. I can't look at cryptocurrencies. We could look at crypto-related stocks. And so maybe while we're doing that, let's look at Coinbase. And I'm going to expand this out again. Why 90 days? Well, because 90 days is a little bit more than a quarter. A quarter is roughly, let's call it 70 days, 67. And so we can get the transition from one quarter to the next. And that matters because not only are there quarterly index rebalances, there are changes to passive strategies. People get overweight, underweight, and they make changes. There are monthly options expirations and quarterly options expirations. So it gives us the ability to see across that and know what's occurring. And this is Coinbase is a very challenging stock. There's no question. Again, it's spending a lot of time below 5. In fact, we could even look at that. If I go over here and say profile it, we can go back test this data and see how it performs. And it will tell us how much time it spends above and below 5. So that's what we want to know. I want to know, is this something that's going to work for me? Well, if I profile buying the uptick and selling the return to 5, it's just horrific. We're down 20%. And here we go. It's been 46 out of the past 90 days, more than half of it below 5, 6 days at 5, a little bit over, almost no time at 10. If you were able to, if you bought it at 1 and you sold it at 10, we could probably model that and say, well, that's where probably most of the returns lie. So if I bought it at 1 and sold it at 10, what would have happened? Now it's still no good. If I can't come up with a good profile here, see, it tells me if I did that, I'd have lost 12%. Buying and holding it loses 10%. If I can't arrive at, it's nothing wrong with the math. The math is telling me find something else. And this helps you avoid, there's a great biblical saying, the prudent foresee evil and hide themselves. Well, the prudent don't ignore good data, right? If the data keep telling you don't do something, don't do it. It's that simple. It's like the old saying, the doctor says, well, it hurts when I do this. And the doctor says, well, then don't do that. And it's kind of the same principle here. So Coinbase would really kind of be a great proxy for cryptocurrencies. It would tell you at this moment, it is very dicey. If the data improve, and we can use the Coinbase is just a proxy, but if Coinbase begins to give us good high probability returns, it's probably true in cryptocurrencies too.
All right, there you have it. A lot of folks are really picking up what you are putting down. Would you like to please? We got two. Can you look at MasterCard?
Yeah, sure, of course. Yeah.
We don't get that one much on the show at all.
Well, it's a massive 500 billion in market cap, right? So usually that's not the kind of security that will appeal to the Benzinga high risk, kind of audience. But that's good. I'm glad that you are, because it applies. Doesn't matter. If we look at the data here, so you can see once again that as long as MasterCard was at 5 or above, it was better. It did worse when look at that huge surge in the supply side, and demand didn't change. This was the one time where the stock declined. Then the short volume went back down so long as it's above 5. One of our great rules is 5-5. We say if you were to follow an arc of supply and demand, all stocks at all times are somewhere along that arc from underloved to overloved and back down. And so the more time that they're above 5, generally above 5, that's where the returns are going to be. It will be modulated by the underlying supply trend. But really the supply trend is down, and the demand side has been fairly level until recently. It was really this big decline in demand here right into options expirations in August that would tell us, okay, well, that's not very good anymore. But if you bought the rise to 5 and you held it till it dropped below 5, look at the very nice returns you could have realized. I like to leave when short volume pops up. So if it's moving along and then short volume rises, say 10% over trend, I probably leave. Even if I may miss out on something, I know now that the risk profile isn't great for me. But that's the way to think about it. So when would you come back to MasterCard? If you're watching this, what you want to see is for sentiment to bottom and reverse and return to 5, and particularly the tick above it. That's what you want. Where might that happen? Well, here's a nice little market structure lesson for you. Strategies tend to change at options expirations. Roughly the third Friday, it'll be in September, and that's a quad witching. Index and stock options and futures both expire. And there will be index rebalances. We already had news out about additions and subtractions to the S&P 500, the mid-cap 400, the small-cap 600, and that stuff will take effect in September. The other side of that is a great time to be watching data like this to say, well, now if money's coming back into maybe blue chips or whatever, because now people are underweight MasterCard, you can ride that, and demand will tell you.
Beautifully stated. All right, we got some more tickers in here. So Katrina would like to see, I believe this is Oracle. And it looks like she started a trial or is subscribed because she's already looking at it, but let's share it with the rest of the folks.
Good for you, Katrina. And I'm glad you mentioned this because Oracle is reporting this week. Maybe it's today. You might know better than me, Katrina. It's either today or tomorrow, I think. And so on Monday, this of the lot, Lululemon reports after the close today. That's always, that's worth looking at too. It can be one of those stocks that produces some real alpha returns above risk if you have the probabilities on your side. So now let's look at the profile. I'll tell you what I like and don't like. I love the fact that Oracle has been consistently above 5. It spends a lot of time at 5 or above, tends to mean that the stock's going to do pretty well. Ahead of results, here's one thing that concerns me. See how short volume has popped above trend, and the trend is right at 50%. So now we're down to a coin flip. I would have said Monday before this trend line showed us this kind of move. The trend will adjust over time, of course. That it was probably the best of the lot. Still might be. It's the least risky, and part of that is purely the size of the dollars in the average trade for Oracle. I want to look at it, in fact, in a portfolio because it's a great way to see what kind of behavior is setting price ahead of time. So it's in here. I'm going to go in and I want to just look at the behaviors. So here's Oracle. It's at 5 bottom, just like we saw, 57% short. There's our one concern. And that trend line for short volume is up. It trades almost $10,000 at a time. And high-speed traders, machines that don't want to own it, are the lead behavior. Well, that's a tell. So if fast traders are lifting short volume, they're telling us that they don't detect underlying rising demand. We can already see it in the demand equation. So if I had to choose now, Katrina, I'm waiting to the other side, right? I'm going to wait. I'd want to go to the sidelines, let Oracle report, and then we'll reassess the data. See if that short line comes down. If it does, we know we're good again.
So I think we've got about enough time for one more.
Okay.
Can we look at V?
Yeah, Visa, right? Yeah,
I believe so.
absolutely can. So I've got it set on portfolios. It should show me what portfolios contain this, and I can go in that way. Let's see what happens here. This, by the way, as it runs, is this is still beta. This is version 2.0. It didn't load there. So we may discover something together here, because I know that is in there. Visa should be in consumer. No, it's in financials, isn't it? Let's go do that. Let's go look at financials. Let's see here. So notice, by the way, we will automatically create sector portfolios for you. 11 of those plus the FANGs. Great way to see the entire market and see what the trends are. So as we do this, let's look at the financial sector. 529 components. Lead behavior is passive investment. That'll be quants, indexes, and ETFs. And as we speak here, the demand curve has flattened and begun to decline, and the supply trend is rising. The likelihood that the group then produces gains for us is very small. Not a great time to be in financials, but let's click through here and we'll speed this along, and let's go find Visa. I assume it's in here. So we're going to go here and do Visa. Whoops, where is it? V. I don't know why we're not finding that. It would be in financials, right? Am I wrong about that?
I think you're
Let's
right.
see here. Yeah, I think I am too. I don't know what that issue is, but I can solve it. Let's do this. Let me go. I'm going to revert to version 1.0. Thanks for the test. I found something for the engineers here who will have to solve this. So let me do that really quickly here. All right. So here in version 1.0, I'm going to type Visa, and it's not. I wonder if there's a data issue with that. There may be. I should find that immediately. You may have found, I don't know who gave us that, but you just found a bug for me, and I'll have that fixed. So I can't tell you Visa, but I'll tweet it right after this. As soon as I know what the issue is, I'll tweet a comment on Visa.
There you go. So follow Market Structure Edge on Twitter to get that update. And yeah, thanks for the QA there, guys.
Yeah, appreciate that.
So let's get one more in. Do it.
Okay.
Hey, we can do the classic. We can do Tesla, TSLA.
Oh yeah, let's do that. Okay, so it's one of my favorite stocks to trade. It is it's one of the most searched tickers in our profiling, one of the top tickers. And it's to me, one of the classic illustrations of the importance of market structure. And it's one of those things that you can very consistently trade rising demand, falling supply. You could do it over and over and produce returns. You can see that here. If I just highlight right here. So if here's the rise to 5, look at short volume, well below trend. Soon as sentiment tops and short volume begins to rise. So demand and supply, when demand and supply begin to equalize, leave. And then come back when it does it again. Here's another opportunity. Falling supply, rising demand, stay in it until those conditions reverse, leave. When they come back, here they are again. Falling supply, rising demand, trade it until they reverse. And they haven't quite. So if you're not in Tesla, it's time to leave. If you're not in Tesla, wait. If you are in Tesla, very close to time to leave. You might wait for short volume to tick up. But it's a great way to trade Tesla. Capture the gains, avoid the declines, take gains, not chances.
That's awesome. So there you go. Very, very succinct. Market Structure Edge. We've got Tim Quast here. Tim, you're going to be at the boot camp this Saturday, aren't you?
I'm glad you remember that, because I would have forgotten. Yes, I am.
So
and I love
you're frozen, just so you know. No, you're coming back in a little bit. Yeah, okay. You're back. Okay. So what I would say, folks, is that anytime you can get a free trial for something, just check it out. Grab that Market Structure Edge, and then get that in preparation for the boot camp on Saturday, so you can follow along with Tim so you can understand how to use further than we've gotten today, how to use it to time entries and exits and understand better what is going on in the markets. Tim, thank you so much for being on the show with us today.
Thank you, Neal. Good to see everybody. Catch you Saturday, noon Eastern time.
Be there. All right. Thanks, man. All right, guys. BenzingaBootcamp.com. Transform your trades in one day. We call it boot camp for a reason. We throw you in there and start you with very basic stuff, give you a little foundation, and take you much further into the advanced stuff, closing with none other than Anne-Marie Band, who some have said is a life-changing experience at our Benzinga boot camps. So make sure you go to benzingabootcamp.com. I wish we'll get that banner up there. Register and join us on Saturday, all live, all free education, hanging out, doing our darndest to make sure that we are trading together and becoming more successful with great education in the world of trading. How many likes did we get to?
Not enough for Spice Girls, Neal.
That's fine. That's fine. All right. So if you're just so that YouTube knows when we post new videos after this video is done being live and it becomes just like a video that is just out there. Please hit the like button. Please hit the bell. Those sorts of things. Tell YouTube that we have uploaded and help get our video recommended to folks so that they can enjoy Get Technical just like you guys. And other than that, what show do we have coming up next?
We have Moon or Bust, and today on Moon or Bust, we're going to be talking about proof of stake. So if you've heard that phrase, thrown around the crypto world, proof of stake, and you don't really know what it means, tune into Moon or Bust to figure out exactly what it is that. Oh shoot! I just got flagged on Robinhood as a pattern day trader. You've placed 4 day trades within 5 trading days. To continue trading and avoid account restrictions, you must maintain a portfolio value minus any cryptocurrency positions of at least $25,000. Interesting. All right.
So, guys, my name's Neal Hamilton. That's producer AB. With us today was Tim Quas from Market Structure Edge, marketstructureedge.com. Definitely check that product out. Really cool. I want that thing next to my charts. It's sweet. But then if you haven't yet, sign up, register completely free for the Benzinga Bootcamp and join us on Saturday. It's always a blast, lots of fun, and it crams a lot of really good stuff into one day. You even get a study guide. Super cool. All right. So it's been a great pleasure. It's good to be back from this Labor Day weekend. I shall see you tomorrow on the next episode of Get Technical. And in the meantime, happy trading, folks.
Boom. See you over on Moon or Bust starting right now.